Now, the business confidence index, it's down 1 index point to 46 in the fourth quarter. The fall in confidence mainly considered mainly to be modest given the significant rise in labour market unrest, especially in the mining sector. At present, business confidence remains a little below its long-term average. Joining me now for a look at this, George Kershoff, Deputy Director at the Bureau for Economic Research. George, thanks so much for joining us. So as I was saying, it looks like a modest decrease of just only 1 index point. What if the mining and transport sectors had directly been measured here? What do you think the fall off would have been? Do you think it would have been significantly more?
We only cover 5 sectors of the economy: the manufacturing, the building, retail, wholesale and motor trade, not the mining sector specifically. However, the mining sector does impact on the manufacturing sector, so it does affect the overall economy, and the index has shown to track the overall economy very well. It is surprising that despite the wildcat strikes, that the confidence index only fell by 1 percentage point. But one could look at the other developments and see that there are countervailing forces.
Mm-hmm. I mean, it's interesting, though, also just looking at the 5 subcategories you do have, because new vehicle dealers sub-confidence index falling back 25 points from 79 to 54, and that really masking the fact that all the other sub-indices were up on the period. So why the sharp fall off there, and why the disconnect from everything else?
One has to take a bit of a longer look. The 79 in the third quarter was quite a high number. And at 54, vehicle confidence isn't low. It still indicates that the majority, although only slightly, of motor dealers are still satisfied with prevailing business conditions. What has played a role is certainly the fact that vehicle sales has been slowing down, and we also know that the fourth quarter traditionally is not the strongest quarter for vehicle sales. Many people delay their purchase until the beginning of next year.
Mm-hmm. But overall, I mean, you just look at a level of 46 and you look at why it's at this level. It's because of the manufacturing category sitting at 38 right now, the building category sitting at 28. What are your thoughts on the direction for these two key parts of the economy, all the building confidence and manufacturing confidence sitting at such depressed levels still?
The two sectors which one can call the production sectors, the manufacturing sector and the building sector, that still remains much weaker than the consumer sectors indicated by the retail, the wholesale and the motor trade. And one must point out that the retail and wholesale did even better in the fourth quarter this year than the third quarter, so there are renewed signs of strength in the consumer sector, specifically non-durable goods, which had been underperforming throughout this year relative to semi-durables, that's your clothing and footwear, and your durable goods such as furniture and appliance and other electronic equipment. The building sector remains a laggard. There has been very little movement in the index, so we see that the residential side there's very little activity, and in the non-residential there is some movement, but also from very low activity levels. Mm-hmm. The manufacturing sector did come as a surprise. There we thought that the wildcat strikes in the mining sector would affect the sector adversely, but we see that domestic demand did pick up, and that domestic demand probably flowed through from the retail and the wholesale into the manufacturing sector, supporting the domestic demand there. So all these are surprisingly and encouraging good news given the industrial strife and violence we have seen over the last month or more.